Alrighty, Doc here from North America. Good morning, good afternoon, and good evening somewhere. What do we got today? Well, we have the aftermath of NVDA. I guess that's pretty much the best way to describe it. The aftermath of NVDA. And you can see how they play the games. The news came out. The numbers look good. Oh, initial jobless claims are coming out now as we speak. Do we really care, honestly? But if you're a money manager, you got to care. Because why, traders? Because you're an incorporation. If you're incorporated, you have to care. If you're not incorporated, then you don't have to care. But most of these 99.9% of all these mutual funds and hedge funds and retirement funds are all incorporated, and they have a incorporation manifesto. You have to write down when you incorporate what you're going to do. Now, there's obviously some wiggle room, but then your investors may not put money into your fund. So you've got to, adjust it. That's really the name of the game. Let's see if we get this all straightened out there. There we are. So what it really comes down to is the investors have to. Am I getting this right? Let's just double check. Yeah, it looks right. Okay, good. And so the investors, they have to follow in the manifesto, and if they don't, they will be sued. It wouldn't matter if they made 20% a year. They would still sue them. Has nothing to do with how much you make. It has nothing to do with it. It comes down to how you do your job, pretty much. And if you break the rules of your job, doesn't matter how good you are or bad you are, they'll sue you because it's easier to sue than make money. So, and the end result is that the buyer of last resort is, you know it and I know it, it's the government. That's right. That's right. It's not the old funds anymore. That's why they refer to the bond traders as vigilantes, because it's a non-listed market and they can't control that, and they really hate that. Trust me. So, what they exactly do is allow the markets to fall by the sellers, and then the government walks in and buys it in the after hours. And sure enough, they did the same exact thing. You can see it, which is really fascinating. Let's see if we can put it up on the screen here. Oh, no, that's not it. Where do we go? Right there. Let's see. I want to close that. Close workspace. There we are. Let's open this up again. And, oh, I see. You were watching the dollar index. You see the dollar index there on the beta platform. So the dollar index, you can see, is lifting up. And so, again, they need these things to stay the way they want them to stay. And they want the voters to have their bank accounts look like, it's bad enough that they have to go in and pay 20 and 30 and 40 and 50% more for all kinds of things, and 100% more. But one thing they can control, they can control how their retirement funds are, how their market funds are. In other words, they can do that because they just prop them up. And we're at all-time highs, basically. And then when we go around the world and look at some of the other stock indices, they're not even remotely close. And then when we go and look at things that are really powerful in the sense of like gold and silver and so forth, again, they're not really remotely close to what the reality is. And that goes on and on and on and on and on. And we keep on shaking our heads. And, it's the same game. So what was the magic that they used last night? It was NVDA. What is the hottest thing out there, traders? AI. The world according to AI. It kind of reminds me of the internet bubble back in 99, 2000. It's got that same flavor to it, it really does. It has that feel to it. And then when in the end, I'm not sure if I could call it illegal. What it is that they just do it. They just, the central bank controls everything they can now. And they can, because they can hand you money overnight and let it sit there. So you say to yourself, Why is the central bank, giving the hedge funds $500 million or $250 million for free every night? Why do they allow that? Some of the top hedge funds making a lot of money have that. This is so that they don't reduce their equity position, their stocks. This way it holds up the price. And they do it to the mutual funds and the retirement funds. They lend them money overnight so that they'll hold on to those stocks, and they give it to them for free. So if you're given free money, you can buy the stock, right? Now your risk is in your own portfolio if it goes up or down. And at the same time, you can sell calls, buy puts, because it's basically the stock is on for free. In other words, you're not using any money of yours to hold on to these things. You can create a synthetic bond and collect dividends. And that's how that works. And they do that everywhere. And you notice the markets got a little hairy about 3 weeks ago when Japan unwound their $20 trillion position. Who do you think helped them unwind that position? Of course, the U.S. Federal Reserve. China, sent a delegation last week to talk to Mrs. Yellen. Do you hear much about that in the news? Nope. They're there for a bailout. I've showed you, there's not much you can show. There's not much you can look at. Understanding the economics in China. But one thing for sure you can tell is, the price of their currency, which is fixed to the dollar now. How are you going to be the world's reserve currency if your currency is fixed to the one you want to replace? Good question there. And you can see the bankruptcies, or what they call when you go out of business or you're losing money, receivership. And you see the receiverships, and some of the largest corporations of China are in receivership, and they don't have much of a choice on how to deal with that more than just keep on selling anything and everything for as long as they find buyers. Doesn't matter what price they sell it at, they just need to sell it. That's what it comes down to. So let's take a look around the neighborhood. Let's take a look at the euro this morning. Right there. Let's put it up on the screen. Right there. Second day in a sell. I don't know. They're just putting some pressure on it. Yo, Robin. Yo, traders. You can see it's moving down a little bit, but look at the weekly. The weekly doesn't care. Longer term money is saying, got to take a profit somewhere. Look at that bump. Imagine you're long from here. Are you going to hold on to it forever and ever and ever until it comes back down to there again? You notice it. They go up, they go down. They go up, they go down. They go down, they go up. They go down, they go up. They go down, they go up. They go up, they go down. They go up, they go down. Nothing moves in a straight line. It moves in a path. And is that higher? Or let's put it this way. Is that lower than that? Yes, of course. Is that lower than that? No. Is that higher than that? Yes. Is that lower than that? No. So what is the path? You can see here, we went into the weekly buy back in here. That's why I put that line in there, because a lot of people have a hard time seeing this with the histogram above the zero line and not above the zero line. And that's the weekly buy. And it said, be long. And then slid into the sell for 3 weeks. Was it 4 weeks? And then battled its way back into a buy again. And this time it refused to take the nervousness. And, the sells, the dailies protected you. But the weekly kept on saying, don't be too brave about being short. And sure enough, it was right. And then you can see here, it goes into a daily buy and a weekly buy. And what do they do? To the moon, Alice. And that's how our math works. And we have a spreadsheet over here showing you how many weeks. In this case here, you can see on the euro. Let's see if we can find it. Right there. There's the euro. And the euro says 7 weeks in a buy, 1 day in a sell, and now we're on a second day. Let's grab one of these red lines. Let's move it over so you can see it better. We'll widen it out. There we go. Went into the sell yesterday. It's weak again today. But the weekly doesn't care. It curved, but it hasn't even touched the top part of the manifold here. And it's still, even the slowest of the slow of our algorithms on a weekly basis above the manifold. We'll see. But more than likely, tomorrow's Friday, and will we find a weekly sell? Not unless they slam the thing. And I'm not expecting it to be slammed. All right. Let's jump over to Mr. and Mrs. Cable. Right there. Same situation, a second day in a sell, and you can see the same thing above on the spreadsheet. Right there. And 1 week back in the buy again. Back in the saddle again. The what were they calling it? The Civil War didn't happen. So they locked up some mommies and daddies so that they couldn't complain about the crimes going on around their schools and their children, but that's about it. So they split the baby in half, I guess you could say. One of those Old Testament stories. All right. So that's the British pound against the dollar. Let's go take a look at Mr. and Mr. and Mrs. Inflation Fighters. We need some of those inflation fighters in our Federal Reserve. We need them in. We should put them in our cabinet when it comes to the Treasury Secretary. Matter of fact, you almost want to make a law that says that the cabinet secretary has to be Swiss, since they don't go around telling you crazy things about it. What do they call it? Transitory. Isn't it just wonderful that the chairman of the Federal Reserve now can make jokes about that? For the Americans that are listening to this, I am sure you love the idea of paying over 100% more for your mortgages. Ha 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 ha. Ha 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 ha. Your mortgage is now 100% more. That's okay. It's a joke. But you're still paying it. All right, and you can see right there, that is the Swiss, and it's trying to perk up a little bit. It's playing with the daily sell. Trying to get into the daily buy, but you see it's there. It's minus 0.00049 still. So it's still below it. The weekly could care less. Up on the spreadsheet, I think, what does it say about the Swiss? Swiss is, and I'll highlight it for you, 13 weeks right there, USD CHF. 13 weeks in a sell, 8 days in a sell. I heard somebody on one of the financial channels say something, something like that. I guess it's a 5-year high against the dollar, something like that. That's what they said. They said, Swiss is like a 5-year high. I'm thinking to myself, good. You feel that good about it? Just convince somebody here in the States to hire one of those people from the Swiss, because they sure know how to do banking. And the characters we have now in the Biden or the Harris administration, or whoever administration it is, it's hard to say sometimes, does not cater to that whatsoever. They don't want competent people. They just have to be a certain color or a certain type of origin. It has nothing to do with the knowledge that they have or the skills that they have or the experience they have. They just have to be a certain color. Everything Martin Luther King said, as far as the Democrats are concerned, is wrong. And that's what it comes down to. Who needs Martin Luther King as far as the Democrats are concerned? Only the Republicans support Martin Luther King at this point. Democrats don't. Actually, they try to tell people that he was a Republican. They try to tell people that he was a Democrat. But in fact, he was a registered Republican. So no wonder they don't like anything more than his name. His policies, no. His ideas, no. His party, no. Okay. So, from there, we march our way over to, where do we go now? We go to the yen. Let's see how Mr. and Mrs. Yen are doing this morning, and all the little yens. Well, it's a second day in a buy, so let's grab one of these greens. There's a green there we can grab. Actually, that green should be right there. Or is it right there? Let's stretch her over a little bit and steal that green. There you go. So went into a buy right there yesterday, and it's still in a sell though. So again, we're not paranoid or concerned. The action to me says, with the central bank now, our Federal Reserve behind them, helping them out with the $20 trillion unwind. And you got to wonder how much the Federal Reserve, I know that they said it was the Federal Republic Central Bank of Germany that helped do most of the unwind. They had $67 trillion swaps on Deutsche Bank. That's why no one would buy Deutsche Bank all these years, and the stock is down 75% from its all-time high. See, there's some of the ways to know if something's doing well or not. How close if they're, just okay, they could be at an all-time high. But if they're 75% from an all-time high, and that's what the Deutsche mark is, I'm not the Deutsche mark, Deutsche Bank. I'm sorry, Deutsche Bank is. Then basically, it tells you that there's something wrong. Don't you think? When everything is at all-time highs, and Deutsche Bank is, 75% away from its all-time high. Don't you think, is there something wrong there? Let's see if we can find it. Deutsche Bank. Where is Deutsche Bank? There we are. Let's try it that way. We'll get it. I'm going to get it up on the screen and show you, because when I say stuff like that out loud, it's not fair to at least to show you that, Let's try that again. Deutsche Bank. Copy, and paste. There we are. I just went Deutsche Bank Germany. Is that it? Try it that way. Let's see what that does. Alright, there we go. And we're going to go with an all. And then here's your example of that Doc is not being out of his mind and inventing crazy stories. There's the all-time high right there. Back in, what is that, 2007? Yeah, 2007. The stock was trading at, it was as high as 92. And right now it's at 1475. So, whereas, some of the banks, we'll just give you another example, like JP Morgan Chase, JPM. No, just JPM. JPM. The stock right there. There's a perfect example. Perfect. All time. Spin it again. And it's just spinning away. I guess they don't want the evidence. They're blocking it. Wait, there we are. The idea that I just went and looked at an all-time high, and you can see the stock is from 92 at 14 now. And I guess if I go and do the same thing to Charlie or C, we will see the same thing. Now let's try this again. Here comes the all. I guess it freaks them out. They don't want to show the evidence. Isn't that amazing? That's the weirdest thing, isn't it? It's like, how dare him go look at all-time highs in one, and the other, I can tell you, we will get it up on the screen because I will not allow this to go on. It says, wait, unreceptive. Of course it's unreceptive. They don't want to hear the evidence. They don't want to hear the truth. They're out there. The eye of the government is at every angle. They have algorithms to keep track of what you look at, and they just don't want to. See, I shouldn't do that. I should just go 6 months, because then they know that they'll be like, oh, the algorithm will go, oh, he's just looking at 6 months. It's no evidence there. Let's try another one. I'm just going to close that altogether, and then go back to it like that, and then go to that. There we are. And we'll put JPM in there. There it is right there. See, they'd rather just give us that 1 day. Let's show 1 year. There's 1 year. Now let's see 5 years. There's 5 years. There's all time. How about that? They don't want to give us an all time. Well, you can see since back to 1985. I guess they're showing it to us. It is. Look at it. Back in 2007, when Deutsche Bank was at 92, this stock was at 49. This stock now is at 221. So, do you think there's a problem at Deutsche Bank? Or do you think, oh yeah, everything's hunky-dory, piece of cake, don't worry. No worries, mate. And then we have one like that in our country too. We have a few of them like that. But this one is another one of those. Citigroup. Citigroup's a fun one. Woo. $62 a share. Can anybody guess what the all-time high was in that stock? Let's see what the 5 year says. 5 year, it's close to, not bad. 5 years. Ooh. Let's go to 2020. The stock was up at 83. Wow. Wow, during the Trump years. Now let's go take a look at all-time highs. There you go. Let's see now. We're talking $588. All-time high. Right there on your screen. And where are we at now? $61. Do you think maybe there's a problem in that bank? Indeed. And I could show you others. It's the same way, and I say them all the time here, but I don't want to wear you out and go on a slow, steady, crazy day. But the trick to reading a chart, look at all-time highs. That's exactly it. They'll tell you the story. The trick to understanding a company. Understand a company, look at its all-time highs. That's the best way to do it, because when you listen to the talking heads on the financial channels, they keep on telling you how undervalued Citi is. Well, do you think all-time highs is around $588 and it's trading at $61? Yeah. But do you ever hear them say anything about that? No, never. Do they say this is incredibly undervalued, and then they go, oh, whoa, really? Yeah, and that's why they're buying it. And then you go, okay, well, what's the all-time high? And you never hear them say that part. They don't go like, what is the all-time high? No, never hear that. And title. If you want to know a company, know a stock. I guess it is know a stock. Look at its all-time highs. Exactly. That's the answer to it there, and I'm going to put that up as knowing a company. Look at. It's an awful long thing. We're going to have to shrink this down. Let's see. Yep. We have to shrink this down. It's so damn big. We'll have to come up with a better way of saying it. Look. How about this? Look at All time. Maybe that's a better way of saying it. All time highs there, we'll do that. We'll say it this way. All time highs tell a story. That's pretty much that's the truth of it all too. So imagine if you're investing and you want to put money money you want to you want to be invested in for the next 20 years. Your retirement money, 30 years. And you don't know that Deutsche Bank was really at one point at $588. And you're buying it now at what was it? Oh no, I'm sorry, that's Citibank. Citibank at $588, and then all of a sudden you find out that it's trading at 61. Wouldn't that make you ask the question? Like, why? Nothing more than that. Just ask why. Let the people who are trying to convince you to buy it answer that one. Same thing with in Europe, Deutsche Bank. Wouldn't you want to know why Deutsche Bank is at $14, almost $15, when its all-time high is at 92 15 years ago? What have they been doing for 15 years? Has anybody figured out they should do some banking, maybe? Banking business? Maybe they should be... Are they out of business? Are they owned by a central bank? I don't even know if we can even see Lloyd's of London anymore. That one, I was telling somebody... Who was I telling it to? I was telling somebody with... Where was it? I was telling somebody just recently, Lloyd's of London's out of business, and they were like a professional. They were like, what? Never heard about that. Yeah, I remember saying that to them. This is like 2 weeks ago. And they were like, what? They're out of business. So yeah, they're owned by the Exchequer. Like, Citibank is owned by the Federal Reserve. Or, Deutsche Bank is basically owned by, the German Republic Central Bank. I mean, it goes on and on and on. Let's see, Lloyd's of London. Hell, would you believe that? I can literally type that much in and it doesn't even know what I'm talking about. I'm sure they have no hunger to advertise how bad they are, and that's what the problem is. Let's see, Lloyd's of London stock. I don't know if there's even a stock to be had. I thought there was at one time. There it is right there. Let's see what it says. There, they do have one. There you go. Same thing. All right, let's see if we can put this on the screen. Oh, no, you're seeing it. There it is. Back in, see, in this case here, back in, the top was really back in 99 at the internet bubble. They were $500 a share. See that? Up in the 500 area. Then, in 2009, they dropped to $39. And the Federal Reserve, or in this case here, the Exchequer came in. And where is it at today? $58.68, or 66 cents, with an all-time high of over 500. Don't you think that tells you the story? I think it does. Wouldn't someone trying to convince you to buy the stock say, oh, by the way, why is Lloyd's of London, trading at 58.66, and you say it's undervalued? It was up, you can see this. It's up $5 yesterday. They're excited, $4.59. But how come it's not back up at $500 like J.P. Morgan? Why is it like Deutsche Bank and Citibank? Why is it just, just down in the lulls? That would be the better question. It'd be like, oh, I don't know. Well, I thought you were trying to sell me this thing. You want me to buy it for my retirement. Yeah, let me get back to you on that. I bet that's one of those. And then they would probably say, our banking group says, maybe it's not right now a good place to be. Something like that. I would imagine it'd be something like that. Yeah, and you can see like year to date. Woo! Was it down in the 41s? Why didn't you tell me to buy it then? I mean, that's only like $2 off of the all-time low. Look at that. Isn't that wild? There is, let's see, there's 2008. They started rolling over in that year, like 2 months before. Well, there's one. That's the 60 days before the election for Mr. Obama, and they started rolling over. They already had an idea that something was going wrong. The product went from 354 down to 30. What is it? Right there, 31. The low. 23. There's a low there of 23.39. You think they're in receivership? You know. So, when looking at anything, be it grains, corn, wheat, take a look at the currencies. I mean, we've seen where GBP at one time was up in the 150, 1.6, 1.5. I remember trading it when I was on the trading floor as a young guy. Let's see if we can put GBP in there. That'd be fun to look at. GBP, USD. Put it up on the screen. 6 months. It's been rallying nicely since it came off the 124 area. Then we go back to 1 year. It's like, woo. And then you go back to 5 years and you go, ow. That's at Brexit right there at 107. Then you go to all-time highs. And you're seeing there it's trading at $2. I remember trading it in the, let's see what year is that. That's 2008. That's what's nice about J4X. I can go back. I remember trading. I could have sworn it was in the 4s and 5s when I first started trading it to the dollar. Yeah. So it was, you could have 5, GBP to $1. Now you have only 1.31. It's definitely down. So by using that as a headline, I think that's a logical thing. There you go. Hey Dan, how you doing? So we're just having a little fun here, just looking at the magic of history. And it's very hard. It's very, very hard to hide financial history. They can hide trickle down economics. In other words, they can do that. But when it comes to an individual stock or an individual, or interest rates, those things are documented pretty clearly. In other words, trickle-down economics is always shown to be very profitable. But if you would listen to the national media, the same characters that want you to buy Deutsche Bank and Citi or Lloyd's of London, you would think that, oh my God, it's a bargain. It's a bargain. You got to step up and get it. Put everything in it. Get nuts. Go buy it instamatically. But in the end result, no. When we look at history, Victor, how you doing? Good morning to you. The charts will be out in another 27, 28 minutes. It works so much better when they're trading live compared to, as I was telling Robin, the it's just like the, let's put NVDA up there. Like NVDA, they had that stock down into the 16s last night. Let's put that up there. Oh, I'm glad all's good. It's nice that you respond and all. I appreciate it. I love everybody jumping in saying hi. I'm always willing to answer any question you have. Let's go find the NVDA. Where's that at? Let's go like here. We'll go right here, and we'll open up the charts to it. I'm not sure if I have that in there right now. I don't think I do. Let's see, where's it at? I think it's right here. There it is. NVDA. Let's see, open workspace. Right there. It's right there. Here it comes. Now NVDA, last night the earnings showed to be double. Everything was good there. And you can see it's trading at 121. But at one point last night I saw it down to 116 and the stock market was getting rocked. And when we go, we'll show you exactly what happened. Right there. Where do you see this? This is Funsky. There she comes. Establishing a connection. Nothing up his sleeve. Let's do this. Let's close. Let's see. Is everything there? Is that what that problem is? That's all there. So let's go over to here. There it is. Let's show you what they did to it last night. This follows the same pattern. They had it down right here to 116. Okay, the stock down to 116, and then with the markets closed and quietness before the Japanese and the Chinese markets and Asia gets going, somebody came in and started buying with nobody around. And before you know it, look at this. This is the London Open. Right there is the London Open. That's the Frankfurt Open right in there. That is the Milan Open right there. That is the Swiss Open. That's the Amsterdam Open right there. And then they said, "Oh shoot, we were down there when they closed these things. Look at it. We got to get in here and start filling in the trades. We can't look like we're off course." And so there you are. You can see now. And then the numbers weren't bad. It was okay. It's just poor. How do you put it? Just poor. Poor future guidance. That's what it was. The future guidance was bad. In other words, they're not going to double in price again. How about if they just go up 6%? Wouldn't that be nice? No, the investors in that product. It's probably the world's. It's very close to being the largest company in the world now. It keeps on. It's a $3 trillion company like Apple is, and Amazon is, and who else is up there? There's a few of them like that. Microsoft is, I think. They're all up there at the all-time highs. See, that's why I say the story. You want to know the story about a stock? Look at its all-time highs. That's exactly it. Go look at that instead. That'll tell you the story right there. And so that's the name of the game. That is the name of the game. So what do we got here? I guess what we have, and then what we have more than anything else is that we have. You can see. Oh, that's the yes. So that's the intraday. So that shows you the story that's going on. Just look at the daily highs and lows of a couple days ago of something and look at it now. Or look at it what it was during the trading day and then go look at it in the after hours and then watch how they lift and change. So, and we've warned everybody about this for years. Anyhow, where were we? We were. Let's shoot over to close. Yes to all. Let's go over and look at, where did we leave off? We were in the yen. Let's take a look at the Great Experiment. There it is right there. This is one of the most outstanding live experiments we've ever seen of an industrialized nation taking their currency and destroying it in front of our face. Fascinating. Just fascinating. And you can see we made a all-time high. Yesterday. And at first I had it on the sheet as it was in a sell, but at the end of the day, someone lifted it back up. And that means, in this case here, when it's going up in value, it's losing against the euro. In other words, it's getting hurt. It's not gaining against the euro, it's losing against it. So, in Turkey, when people used to be no more than like 7-8 years ago, they could go and buy a Turkish lira. What year is that? That is back there. That's back in 2021. It was at 10. It is from 10, and it used to be at in 2000. Where was it at? Back in that's what's so good about J4X. At one time, back in 2015, it was at 1, and so no more than say 4 years ago. 4 years ago, it was not even 2 years ago. It was trading at 12 at one point, and now it's trading at 40. Can you imagine if the British pound went from 1.6 to 40.40? In other words, it dropped that big. I mean, people would be out of their minds. Imagine if the euro did the same thing. It went from 110 or to 112 down to 35, 0.35. I mean, that's devastating. I mean, we saw what happened with the Japanese currency. It went from the mid point 70s all the way up to 1.61, and the Federal Reserve came in and straightened things out for them 3 weeks ago. Removed that big, ugly $20 trillion swap that the central bank had on that could not find a way to get out of. And you don't think that they lent them money like they lend, Ken Griffin's company? What is Ken Griffin's company? I understand they give him $1 billion a night for free. Ken Griffin. Let's see if we can find that. Fund. Bing, bing, bing. Citadel, isn't it? That's it. Citadel. Yeah, here's a look at the headline. Let me just show you the headline they have for Citadel and Ken Griffin. When you Google it, it says Ken Griffin, the architect of modern finance. As a founder and CEO of Citadel, Griffin has not only shaped the landscape of hedge funds and market making, but let me go back to that. Landscape of hedge funds and market making, but has also emerged as a philanthropic force. Well, why does the Federal Reserve give them $1 billion a night? In other words, let them hold on to $1 billion for free for years now? If you're that good, why do they need to have $1 billion? That's so that they will hold on to stock and not liquidate it. And so they're trying to make sure that there's buyers for stuff that they want bought. And that's the answer to it all. Let's see if we can get that. I wonder if Google will say something like, how much... Let's see, Ken Griffin, it's a Citadel and the hedge fund. Let's just do Citadel, not Ken Griffin. Let's do that and see Citadel hedge fund, paste, overnight money from Fed. Let's see what they say about that. Hedge fund billionaire drops suit versus IRS tax. Let's see. Disclosure of outside contractor. That's probably the Federal Reserve. How hard is it to get Citadel hedge fund? Let's see. Who is the largest shareholder? We've seen those. They put those stats out every so often. Who has Fed money? And Citadel has. I have to try to find that. We'll show it to you one day. We'll hunt it down. But and usually I try to show you everything I'm mumbling about, just to, to legitimize it more. But the last I heard was they had over $1 billion overnight, every night renewed. And I can tell you, let's see, Fed government. Let's see, let's try this. Overnight money. Let's see, hedge fund treasury exposure, repo, and margins. That's what it is. We find that hedge funds, gross exposure and repo borrowing have elevated through and below levels observed leading to the COVID-19. Let's see what is the 220 rule for hedge funds? Is Congress banning hedge fund from buying homes? Let's see. Treasury seen rising. Let's click on this to see if they show anything there. Because that's how they do them. What's called when they lend money to the banks, they lend money, and then what they do is they call it a repo. They repurchase it back. They repurchase the cash like it's a quality. Hedge funds have become among the most active participants in the U.S. Treasury markets over the past decade. As a result, the financial stability vulnerabilities associated with the leveraged treasury market exposure, which are facilitated by low or zero haircuts. In other words, they don't charge them anything. They give it to them for free. That's why I'm always mentioning haircut. Their treasury repo borrowing have become more prominent in In this note, we use regulatory data from the SEC, from the PF. That's where I've seen it come in from the SEC. Yeah, so the hedge funds are getting money like they're a bank, and they get it from the Federal Reserve. Let's see if they show us anything. From 200 to 1400 overnight, monthly. Okay, that's a monthly indicator. So back in 2013, it was down as low as, well, the blue one says short exposure and long exposure. With 600, now it's gotten as high as 14 and it's at 1,000. I would love to see a chart from 2007. They're hiding this stuff. And it's all in here, how they lend them money and then how they take it back, and they don't, and they give it to them for free. So. And when next time I see it, I'll do a webinar on it. They hide that data. It's a little hard to find at times, but that's all right. So from there, we were looking at the great experiment over here, and there it is right there. And basically, I don't see the weekly weakening in any particular way. I can see that the slow is turning on the weekly right there. The fast is dropping, but look at the manifold. It's way down here. So there's no worries. This poor thing looks like it wants to go do that 42 area. And I'm really sad to have to say that out loud, because every time I say these things, it seems to happen over a 2 or 3 month period, or sometimes it's only a 2 or 3 week period. In the case here, a couple of days ago, I finally capitulated and said, I got to tell you, it looks like it wants to go up into the 41 to 42 area. 41.75 to be exact, 42.75 area. And sure enough, what did we get? I can't control this. I can't make that goofy distortion. They jammed it up to 40 on us 3 days later when I said that. Because they started taking out the 38 area. When they took out that 38 area, the next stop in my math is 41.75 to 42.75. So, for those that are playing this product, be careful, traders. Very, very careful. All right, from there we go over to, ooh, good. It looks good. South African Rand. The haircut there is about a 33%. But look at it. It's still cruising around the lows of 17.5. I would imagine we see a little strength in gold right there. Where's the gold? Come on, gold. I know you're around here somewhere. Oh, I know it is. Right there. And there is, you know what, let's go back to that again for a second, like that. And let's go over to the beta. Let me put gold up on the beta so I can push 2 buttons off and on without having to search for things. Gold is updated on the beta at the moment. So let's take a look at the gold. And there it is right there. You can see there is a strength in it. Right there. See that strength in it this morning. It's still in the daily sell. Still in that weekly buy, though. Then, can you... I think we said something about that yesterday. Could you really not own gold with the way the central bank is acting anymore? And the inflation situation at the same time, especially if they're going to lower interest rates, and it makes it even easier to own gold. So you can see here today, it's up nice and firm. And you can see here, South African Rand seems to be literally tied to the 6 month, is it the 6 month or 1 year? I think it's a 1 year low. I think let's take a look at that. That's a 1 year low. That's 17.5 or 2 year low. Ever since they found the $500,000 in cash in the former president's office, that has been the, that's been it right there. It was the 17. Yeah, we have that written on the chart even. Politics, $500,000 in cash. And so it was the 17s, and then you can see it's tried to get down to that 17.5 here, didn't do too well at it. Tried to get back to the 17s again, got down to the 17.5, and now we seem to be parked. What is that? The 1770s. They can't even. There's a 1767. They can't even get down to the half. They're having a real hard time to get down to here. It had exploded the product up into the 18s when we first started following this thing. It was in the 12s and the 11s and 13s, and so when it goes up in value, it's we don't want that. We want to leave that there. When it does that, this upwardly move means that it's losing against the dollar. There it's gaining against the dollar. There is losing against the dollar. There is gaining against the dollar. There is losing against the dollar. In this case here, now it has been gaining against the dollar by going down, and usually that does this to that. Right there. The gold. And you see it's trying to lift up. The beta seems to be telling us that there's more buying in it than we realize. The old platform is telling us, nah, not too, it's up, but don't worry about it. You know. But I'd say, wow. We'll see how that plays out by the end of the day. You see the weekly here acts the same way as the beta right there. Yeah, you can see that. It's all in those long weekly buys, and they're just banging along. They're not really damaging the manifold. It's constantly showing strength like that. They really have a hard time beating up on it. Now let's go over and look at silver. I knocked it off its little perch of the $30 area. And it's in a second day of a sell. But the weekly's holding on after a second good. Oh, what happened to that? Why is that color off? There it is, right there. And let's put the weekly in there. Went into that right there. And there's the weekly. So we're in that weekly buy, and you can see it on the spreadsheet. If we roll it that way, and if you want a spreadsheet, just contact Robin, and he'll send you one for free every day. Let's see, where's it at? Right, Silverado, right there. 1 week in a weekly buy, 1 day in a daily sell. Yep, and it's starting a second day of a sell and a second week of a buy. And so if you want one of those spreadsheets, right there, you can has all the value of how to contact them. There's a phone number, there's an email right there, and there's a website right there. You can see it in that left corner there that I just highlighted up in here. So you can Google Chicago Quant Technologies, and you'll see our symbol, and you'll know you can contact them, and so forth and so on. So there's the spreadsheet. Janos said, hey, you got to keep that spreadsheet up on the screen every day. Got to see that so people can use it. I said, okay, fine with me. Because Janos has been getting it for years. All right. And any other Dukascopy person who wanted it could have it. Didn't matter to me. You can have it if you're, easily have it. You're going through Dukascopy, you're fine. Just, go through Chicago Quant and you're fine. Just contact Robin and he'll send it to you. Dukascopy has nothing to do with it. They're not responsible for it, and they're not liable for it. They're just happy to see other. It's a newsletter basically. So it's free speech and all that other stuff. Just happens to be in a mathematical form and a couple of letters. All right, traders, we're out here. This is Doc from North America. We will. Let me just show you a couple other things since we're running late now. There's copper. Copper's down for a second day. Mr. and Mrs. Platinum. Look at that. Platinum's trying to get through the zero line. That's nice. And it's in the weekly. It's trying to battle its way into. Look at that. We'll have to double check that. I didn't think we were in a weekly buy. The spreadsheet says it's in a weekly sell. So I know I had to reload everything this morning. Didn't realize they did that. We'll have to double check that. And what's the next one? Let's look at crude oil right there. You see crude oil is flirting with a daily buy after 2 days in a sell. You see the weekly is pressing down. It has a little pink circle around it right there. So oil is starting to break down, and we'll go through the rest of the world tomorrow morning. So this is Doc from North America saying, happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, traders.